I'm sure you've heard of it. It's all anyone can talk about, even though they don't want to. Some say it's under control, others say the rise has only just begun. So, what is the truth? But before we dive into the details, let me ask you a question. Even though you probably have heard of the term inflation, do you know how it affects the economy? And more importantly, how can it affect your investments? So, let's start with the basics. What is inflation? Inflation is the rate at which the general level of prices for goods and services is rising, and, in turn, the purchasing power of currency is falling. This means that the value of money decreases over time, and it takes more money to buy the same goods and services than it did in the past. Let's move away from the past now and look at the current state. In recent months, we've seen an increase in inflation rates, with prices rising at a faster pace than usual and the inflation rate of the US dollar being as high as 8% in March of 2023. This is due to several factors, such as supply chain disruptions, rising energy costs, and increased demand from consumers. The latest data shows that inflation is on the rise, and it's not just a temporary blip. Some government economists state otherwise, claiming inflation of the US dollar is under control compared to other currencies. But that still does not mean the US dollar is stable. It still can damage the economy. So, what does this mean for different sectors of the economy? Well, it means that the cost of goods and services will rise, which can have a significant impact on various sectors, such as housing, healthcare, and consumer goods. For example, if you're planning on buying a new house or a car, the rising inflation rate can make it more expensive for you. In addition, inflation can also impact your savings and investments, as the value of money decreases over time. How can you stop this though? One strategy is to diversify your investments and consider investing in assets that can protect you against inflation, such as real estate, but this has not always been true, gold, or treasury inflation-protected securities. Another strategy is to stay informed and monitor economic trends and indicators. Some even say to keep money in numerous other currencies instead of just one. But these may not always work, and it's important to do your own research and not take this as financial advice. Thanks for watching.